Silicon Valley Bank collapses. Let's have a look. Hello everyone, Florian here, and welcome to another episode of Heiser Says. Grab your stein of coffee. Let's check out this article looking at Silicon Valley Bank. So it's the largest failure since 2008. Billions stranded. So we'll have to see how this will impact the everyday person. Maybe the tech sector isn't doing as well. We saw, it seems to be a common story now of tech companies really tooling up, really manning up during the lockdown period and the COVID crazies, and then just cutting everyone loose. So it'd be a tough sector if you're in and looking for jobs. Could this be the equivalent of the gaming crash of the 80s? Could this be on that par? There's a question for you. So let's check this out. Startup focused. Okay, startup. So how many of those clients were not making any money? Lender, SVB Financial Group, became the largest bank to fall since the 2008 financial crisis on Friday. In a sudden collapse that roiled global markets, left billions of dollars belonging to companies and investors stranded. I literally, just 5 minutes, I received an email. Hang on, let me bring that up. About this. Have I already deleted it? I probably have. Hang on. From Matterport. They have, Matterport is a 3D scanning company that I used years ago trying to crack the real estate market for doing, photographic walkthroughs. Should never have bought it because real estate agents don't pay money for anything. They're notoriously cheap. But I just got an email saying because of what's happening to Silicon Valley Bank, because they're a startup, they're moving to JP Morgan Chase for their payment processes. So there you go. That's how I've been impacted. Oh, wait, here it is. So there we go. Writing to inform you, recent developments of the closure of Silicon Valley Bank on Friday. As a result, Matterport is moving receivables accounts to JP Morgan Chase Bank. Not that I'm banking with them anymore, but there you have it, guys. So if we have a look here, California banking regulators closed the bank, which did business as Silicon Valley Bank on Friday, and appointed the Federal Deposit Insurance Corporation. And, okay, great, it's cut something off there. You know what? We will old school it. Yep. Where is it? As receiver for later deposits, disposition of its assets. Based in Santa Clara, the lender was ranked the 16th biggest in the US at the end of last year with about $208 billion in assets. Specifics of the tech-focused bank's abrupt collapse were a jumble, with the Fed's aggressive interest rate hikes in the last year, which had crimped financial conditions in the startup space in which it was a notable player, seemed front and center. As it tried to raise capital to offset fleeing deposits, the bank lost $1.8 billion on treasury bonds, whose value were torpedoed by the Fed rate hikes. I wonder if they would have been fine if they just had not put their money in treasury bonds, but what are they going to do in it? Because who's using the bank? Looks like all of their clients needed their money too, didn't they? Silicon Valley Bank's failure is the largest since Washington Mutual went bust in 2008, a hallmark event that triggered a financial crisis that hobbled the economy for years. The 2008 crash prompted tougher rules in the United States and beyond. Since then, regulators have imposed more stringent capital requirements for U.S. banks aimed at ensuring individual bank collapses won't harm the wider financial system and economy. So this is going to be a test to see if those systems that were implemented work. The main office and all branches of Silicon Valley Bank will reopen on March 13th, and all insured depositors will have full access to their insured deposits no later than Monday morning, the FDIC said. But 89% of the bank's $175 billion in deposits were uninsured as the end of 2022, according to FDIC, and their fate remains to be determined. The FDIC is racing to find another bank over the weekend that is willing to merge with Silicon Valley Bank, according to people familiar with the matter, who requested anonymity because the details are confidential. While the FDIC hopes to put together such a merger by Monday to safeguard unsecured deposits, no deal is certain, the source added. An FDIC spokesman did not immediately respond for comment. Separately, SVB Financial, the parent company of Silicon Valley Bank, is working with investment bank Centerview Partners and law firm Sullivan and Cromwell to find buyers for its other assets, which include investment bank SVB Securities, wealth manager Boston Private and equities firm Mafato Nathanson, the source said. These assets could attract competitors and private equity firms, the sources added. It's unclear if any buyers will step up to buy the assets without SVB Financial having filed for bankruptcy first. Credit ratings agency S&P Global Ratings said on Friday it expects SVB Financial to enter bankruptcy because of its liabilities. Companies such as video game maker Roblox Corp. Who was it? Failure to report, I think. No, another one. A YouTuber I watch was showing a Roblox game that's like a first-person shooter, like a real game. It's crazy. Streaming device maker Roku said they had hundreds of millions of dollars in deposits at the bank. Roku said the deposits with SVB were largely uninsured, sending its shares down 10% in extended trading. Technology workers whose paychecks relied on the bank were also worried about getting their wages on Friday. An SVB branch in San Francisco showed a note taped to the door telling clients to call a toll-free number. SVB Financial CEO Greg Bakker sent a video message to employees on Friday acknowledging the incredibly difficult 48-hour lending up to the collapse of the bank, 48 hours leading up to the collapse of the bank. The problems at SVB underscore how a campaign by the US Federal Reserve and other central banks to fight inflation by ending the era of cheap money is exposing vulnerabilities in the market. This worries walloped the banking sector. US banks have lost over $100 billion in stock market value over the past 2 days, with European banks losing around another $50 billion in value, according to a Reuters calculation. US lenders First Republic Bank and Western Alliance said on Friday their liquidity and deposits remained strong, aiming to calm investors as their shares fell. Others, such as Germany's Commerzbank, issued unusual statements to reassure investors. Well, if there's a bit of fear in the market, it may be a time to scoop up some opportunities. Isn't that what you're meant to do when everyone's afraid? Or are you worried that there'll be a contagion? We'll have to see which industries are taking advantage of the cheap money. I mean, how many of the startups that we hear about make absolutely no money? Like nothing. They're just constantly losing money, and they're just raising money to go from one step to the other. We saw it here in Australia. What was that? That drafting website thing, that collapsed. It wasn't making any money. You know, how often do we hear the stories again and again and again? You're going to see that a lot in the startup sector. And Silicon Valley Bank is, well, shows you. It's all smoke and mirrors, isn't it? I wonder if you get that in the more boring, down-to-earth sectors. Some analysts forecast more pain for the sector as the episode spread concerns about hidden risks in the banking sector and its vulnerability to the rising cost of money. There could be a bloodbath next week as short sellers are out there and they are going to attack every single bank, especially the smaller ones, said Christopher Whalen, chairman of Whalen Global Advisors. U.S. Treasury Secretary Janet Yellen met banking regulators on Friday and expressed full confidence in their ability to respond to the situation, Treasury said. The White House said on Friday it had faith and confidence in the U.S. financial regulator when asked about the failure of SVB. The genesis of SVB's collapse lies in a rising interest rate environment. A higher interest rate caused the market for initial public offerings to shut down for many startups and made private fundraising more costly. Some SVB clients started pulling money out. To fund the redemptions, SVB sold a $21 billion bond portfolio consisting mostly of U.S. Treasuries on Wednesday, and it said it would would sell $2.25 billion in common equity and preferred convertible stock to fill its funding hole. By Friday, the collapsing stock had made its capital raising untenable, and sources said the bank tried to look at other options, including a sale, until regulators stepped in and shut the bank down. The last FDIC-insured institution to close was Almena State Bank in Kansas on the 23rd of October 2020. So there we go, everyone. Well, let's have a bit of a talk about... So is this another bank collapsing? Should we be terrified and concerned? Is it all coming down? All coming to fruition? I don't know. Honestly, I think we're going to see how the regulations changes that have come about since the GFC, how well they will work and if it will contain this. But you've got to realize we're looking at a sector here that's really been juiced up on the bullshit money. And you've got a whole lot of businesses that don't make a dime. That probably tooled up during COVID, probably expected the lockdown growth that they'd experienced to continue when it was just a complete, probably 1 in 100-year event. So anyway, guys, one to keep an eye on. Let me know if you have been affected by this at all. I guess the closest I've come is a business I don't pay for, haven't used in a decade. Sent me an email. There you go. As always, thanks for watching. Check out Heiser BIM and Heiser Does for other content I create. And if you're a fan of the channel and enjoy the content I make here, you can support us on YouTube or Patreon, use our affiliate links, buy our pocket squares, or call us if you need an architect. Take care, everyone. Have a great day, and I will see you all in the next episode of Heiser Says. Bye for now.